Is Palantir really the top AI stock to invest in right now? Or are there hidden gems lurking that could outpace it in the next 12 months? Well, you're in for a surprise because two tech giants, AMD and ServiceNow, might just have the edge over Palantir in the near future. Stay tuned to find out how these companies are making waves and why analysts are predicting huge growth. Hi, welcome to the Finance Savvy. Thank you for tuning in today. If you're passionate about the stock market and want to stay updated on the hottest trends in tech and AI, make sure to subscribe to my channel for more insights and updates. If you have any questions or comments, feel free to drop them below. I love hearing from you all. Now, let's dive into today's topic. In this video, we're going to explore whether Palantir can hold on to its spot as the top AI stock, or if advanced micro devices, AMD, and ServiceNow could surpass it in market value by mid-2026. We'll break down the reasons why analysts think AMD and ServiceNow are set to shine, and how they're making huge strides in AI and technology. Palantir's position. Palantir has undoubtedly become one of the hottest names in the AI space, with a market cap recently hitting $230 billion. But despite its impressive performance, some analysts believe that AMD and ServiceNow will actually outpace Palantir in the next 12 months. That's right, AMD, known for its dominance in microprocessors, and ServiceNow, the leader in IT service management, are set to deliver strong returns. So let's break down why these companies are getting so much love and why you should pay attention. Advanced micro devices, AMD, 127% potential gain. AMD has been gaining market share from Intel for years, and it looks like the company is positioned for even more success in the server and PC markets. The semiconductor giant has been consistently expanding its territory, especially in central processing units, CPUs. While AMD has struggled to make headway in the AI accelerator, GPU market, dominated by Nvidia, it still continues to innovate and maintain a stronghold in other areas. Recently, AMD projected a significant increase in its server farm AI sales from $5 billion in 2024 to several billion dollars annually over the next few years. That's a big jump. Wall Street analysts expect AMD's earnings to grow by 43% over the next 4 quarters, which means its current valuation, trading at around 10x earnings, might actually be undervalued. Rosenblatt Securities has a price target of $250 per share, implying a potential 127% gain from its current price of around $110. By mid-2026, AMD's market cap could skyrocket to $405 billion, leaving Palantir in the dust. ServiceNow, 40% potential upside. Now, let's talk about ServiceNow. This company has solidified its position as a leader in the IT service management, ITSM space. It's not just about automating processes. ServiceNow is using AI to fundamentally change how businesses approach workflows, customer service, and more. ServiceNow is also making waves by integrating generative AI into its platform, allowing users to automate tasks like summarizing information, drafting customer responses, and even helping developers with coding. Talk about AI working behind the scenes to boost productivity. ServiceNow was recently named a leader in AI for ITSM applications by Gartner, a prestigious recognition. The company reported 21% revenue growth in the last quarter, with strong earnings growth of 18%. Despite missing some sales estimates, analysts are still optimistic about ServiceNow's future. Citigroup has set a price target of $1,426 per share, suggesting an 18% upside from the current share price of $1,020. With a market cap around $247 billion by 2026, ServiceNow could easily surpass Palantir's current valuation. The verdict: should you buy AMD or ServiceNow? So, what does all of this mean for you as an investor? AMD has an amazing upside potential of 127% in the next year, and analysts are really excited about its prospects in the AI-driven server farm market. ServiceNow, while a bit more expensive, still has an 18% upside potential, and its AI-driven automation tools are in high demand across industries. Both companies are positioned for strong growth, and they each present unique opportunities in the tech sector. It's tough to call who will come out on top, but with Palantir trading at such a high valuation, AMD, and ServiceNow look like they could have the edge in the next few years. The verdict: should you buy AMD or ServiceNow? So, what does all of this mean for you as an investor? AMD has an amazing upside potential of 127% in the next year, and analysts are really excited about its prospects in the AI-driven server farm market. ServiceNow, while a bit more expensive, still has an 18% upside potential, and its AI-driven automation tools are in high demand across industries. Both companies are positioned for strong growth, and they each present unique opportunities in the tech sector. It's tough to call who will come out on top, but with Palantir trading at such a high valuation, AMD and ServiceNow look like they could have the edge in the next few years. Coming up next, Oracle's big push. Before we wrap up, make sure to check out my next video where we'll discuss Oracle's push into the AI space and why its stock is poised for strong gains in the next 3 years. Oracle is making a huge leap forward, and you won't want to miss that update. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to the Finance Savvy for more insights on the latest market trends and tech stocks. Got questions? Feel free to reach out. We'd be happy to help. Stay savvy and keep investing. See you in a few seconds. Where will Oracle stock be in 3 years? Is it set to skyrocket? Is Oracle the next tech stock to explode over the next 3 years? You might be surprised by how far it can go. From being dubbed a dusty old tech company to now riding the wave of the cloud revolution, Oracle is making major strides. In this video, we'll dive into why Oracle stock could soar as high as 65% by 2028 and what's driving its new growth. Stick around to find out if Oracle could become your next big win in tech investing. Hi, welcome to the Finance Savvy. Thank you for tuning in. If you're passionate about the stock market and want to stay updated on the hottest tech trends, make sure to subscribe to my channel for more insights and updates. We've got a lot to talk about today, and if you have any questions or thoughts, feel free to drop them in the comments below. I'd love to hear your feedback. Now, let's dive into today's topic. Today, we're going to explore Oracle's growth potential over the next 3 years and how it's positioning itself as a leader in the cloud and AI markets. With its cloud infrastructure, AI capabilities, and recent acquisitions, Oracle could surprise investors in a big way. So let's break it down and figure out why Oracle could be set for a huge 2028. Oracle's big comeback. Once thought of as a legacy tech company, Oracle has successfully shaken off that dusty image and turned itself into a powerhouse in the cloud computing and AI sectors. The company has seen impressive stock growth over the last few years, largely driven by its cloud services and AI-powered solutions. So how did Oracle pull this off? Let's take a closer look. How Oracle reinvented itself. For much of the last decade, Oracle focused on its traditional database software and on-premise solutions. But as the cloud revolution took over, Oracle recognized the need to adapt. Over the last few years, it has made significant strides in converting its database services into cloud-based solutions. This shift was key to its revival. Oracle didn't stop there. Cloud-based applications like enterprise resource planning, ERP, healthcare IT, and cloud infrastructure services became a major part of its portfolio. These offerings are now driving strong growth for Oracle, and they are likely to continue to do so in the coming years. Despite the overall market slowdown, Oracle's cloud business has been growing rapidly, with cloud services revenue rising by 22% in fiscal 2022, 29% in fiscal 2023, excluding its acquisition of Cerner, and 26% in fiscal 2024. That's solid and consistent growth that investors love to see. The AI factor, a huge opportunity for Oracle. But what makes Oracle particularly interesting today is its heavy focus on artificial intelligence, AI. The AI boom isn't slowing down anytime soon, and Oracle is well-positioned to capitalize on this massive opportunity. The company's cloud infrastructure services, OCI, are starting to dominate the AI space, allowing businesses to store their data and manage AI-driven workloads. Oracle is even rolling out features specifically tailored to accelerate generative AI, making its platform indispensable for companies using AI for data storage, processing, and analysis. Oracle already works with massive clients like Nvidia, Uber, and ByteDance, TikTok. These are some of the biggest tech players in the world, and Oracle's deep integration into their AI strategies is a big deal. What's next for Oracle? So, what can we expect from Oracle in the next 3 years? The good news is that Oracle's cloud business is expected to keep expanding as more companies shift their operations to the cloud and take advantage of AI. Analysts predict 12% revenue growth and 20% earnings per share, EPS, growth from fiscal 2024 to fiscal 2027, which is quite impressive for a company of Oracle's size. Based on these growth expectations, Oracle stock could rise 65% by 2028, potentially reaching around $280 per share. That's a nice bump from its current valuation. While it may not deliver the same explosive returns as smaller, higher-growth tech stocks, Oracle's stability and steady growth make it an attractive option for investors looking for solid, long-term returns in the cloud and AI space. What sets Oracle apart from other AI and cloud giants? Now, Oracle is still playing catch-up with the big dogs like Amazon AWS and Microsoft Azure, but it's starting to carve out a unique position in the cloud space. Unlike its competitors, Oracle's strength lies in its database and AI integration, areas that AWS and Azure aren't necessarily focusing on as much. Also, Oracle has shown that it's not afraid to make bold moves. Its $28 billion acquisition of Cerner, a major healthcare IT company, is a clear indication that it's willing to invest heavily in emerging sectors like healthcare IT and AI. Oracle stock could be a hidden gem. With its continued focus on cloud-based applications, AI-driven infrastructure, and strategic acquisitions, Oracle's future is looking bright. Investors looking for a more stable, less volatile alternative to high-growth tech stocks like AMD or Palantir may find Oracle to be a solid choice. While it might not have the same level of excitement as some of the newer players, Oracle's proven track record and its positioning in the cloud and AI markets make it a great long-term bet. So, where will Oracle be in 3 years? It's clear that Oracle's transition to a cloud-first, AI-driven company is just getting started. If the company continues to execute its strategy well, we could see Oracle stock soaring in the next 3 years, potentially hitting a valuation of $280 per share by 2028. That's a 65% upside, which might be just what your portfolio needs. Whether you're looking for stability or growth in the tech space, Oracle offers a nice balance. And as the AI and cloud markets continue to grow, Oracle could become one of the top players in the industry. Wrap up. Connecting the dots to the AMD and ServiceNow growth story. Now that we've explored Oracle's exciting future, it's time to shift gears a bit. If you want to learn more about other companies with massive upside potential, make sure to check out my previous video where we explored AMD and ServiceNow, two companies that could surpass Palantir's market cap in the next 12 months. Both are doing incredible things in the AI space, just like Oracle, and their growth prospects could take their stock prices to new heights in the coming years. Don't miss out. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more insights into the world of tech stocks. Got questions? Feel free to reach out. I'm here to help. Until next time, stay savvy and keep investing.